Hello, in this presentation we will enter the bank reconciliation for the first month of operations into QuickBooks Online. Here we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are on QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering bank reconciliations for the first month of operations. For this problem, we have entered data as a new company or a company new to the QuickBooks file and entered beginning balances, then transactions for the month of January and February. We have not reconciled either January or February, although we have entered data for both months. Now we're going to go through and we're going to reconcile the bank accounts first for January and then in another presentation for February. Both of those 2 months are going to have their own kind of problems. The first bank reconciliation we have often causes more problems because we have to get that beginning balance right. And oftentimes there's some transactions that take place before we start entering the data into QuickBooks, and we're going to have to deal with that beginning balance in order to figure that out and see how to deal with that. Once that's been done, then the second month of operation will be easier in that format, in that we will not have that the beginning balance should be correct after we do the first bank reconciliation. So the first bank reconciliation usually has most of the difficulties when starting a new business. Once that's set up, once that's gotten in place and is correct, the reconciliation process actually gets a lot easier as we go. So the reconciliation process, what is it going to do? We're going to go to the reports here to look at it real quick. We'll go to the reports on the left side. We're going to go to the balance sheet report. Now we've had 2 months of operations, but we really just want to see as of the end of the first month because we're reconciling January 31st. So we're going to type in 01/31/21 to 01/31/21, meaning just the day of January 31st, 2021 to January 31st, 2021. Remember, the balance sheet is as of a point in time. So then we're just going to run that report, and it'll give us our balance sheet for that date, for January 31st. It wouldn't matter if we put January 1st to January 31st because really it's just going to give us that checking account balance as of a point in time, as of the end of the time period, as of January 31st. So we have at that point $94,436.17 in our QuickBooks system. What we want to do is verify that amount and make sure that it is correct. How do we do that? One way is that we can compare it to the bank. The bank is a huge check against our system to make sure that we are doing things correctly, because the bank is really a third party that actually records all of these transactions again on their side, and they're an uninterested third party or a third party that's not directly affiliated with the company, and they're basically just double checking all of our numbers. So therefore, if we can just check and tick and tie what we have in the checking account to what the bank has in the checking account, we have a lot more verification. So after the double entry accounting system itself, this verification method is the second best internal control we have. One of the biggest defenses we have against making an error. One of the biggest safeguards we have to feel assured that our financial statements are correct. So we're going to look at these transactions and say, is that what is on the bank statement? So if we get the bank statement as of this date, obviously when we get the bank statement, it'll be sometime after January 31st because they'll have to enter all the data and give us the bank statement. Also note that if we do have an electronic system, that's great, and we can see things happening in real time and everything, but we really want to reconcile as of the bank statement date because that'll give us a distinct line of this is what happened in this month of operation, and that'll give us a time frame on which we can enter the data and reconcile the data. So we really want not just an online stream of transactions, but a statement saying, hey, this is what happened in the month of January, and that's going to tell us, the bank statement typically will say, here's our beginning balance, here's what you started with, and here's the activity, additions in terms of deposits, checks or other withdrawals, and here's the ending balance. So note that this is the key number. This is our ending balance, 109,415. You would think as of January 31st, that would be what is on our books as well. And as we just saw, it's not. Now, that could mean that there's an error and we have to adjust something, or it could mean that it's just timing differences. Timing differences meaning that we have entered transactions that have not yet cleared the bank. So the general rule is going to be this. If it's on the bank statement here, oh, by the way, obviously we're going to have other data here. Here's the deposits that are going to make up the total deposits number here. And here's the checks and other draws, other deductions that make up the total number here to get to our ending number. What we're going to do is just tick and tie all these off, and it's a bit of a tedious task. It's just something that we got to do to just check everything off. And if something is on the bank statement and not on our books, the typical rule is that the bank statement is probably correct and we will have to fix our books. Meaning, if we see some transaction here that's on the bank statement, such as a check or something like this, in our case it'll be withdrawals and service charges on the bank statement, and they're not in our books, bank statement's probably right and we're going to have to make the adjustment. If on the other hand it's on our books and not on the bank statement, the general rule is that it's going to probably be a timing difference, meaning if we had a check, say, for check number 11011 for some amount and it was written on 131, well, maybe it just didn't clear the bank yet and it hasn't cleared. So that's not really the bank's fault, but we're going to say it's kind of like an error on the bank side. Our books are right because we know that that check was written, and that will be the reconciling item that we will have. The same with the deposit side. So once again, we're going to just check off all of this stuff as we go through this. And as we do that, if something's on the bank statement, not on our books, we're probably going to have to fix our books. If something's on our books, but not on the bank statement, it's probably just a timing difference, meaning a check that's been written towards the end of the month that has not yet cleared. That will be a reconciliation item. That's what we're going to use to construct our bank reconciliation. So let's take a look at what this looks like. I'm going to go back to the reports. To get to the bank reconciliations, we're going to select this cog up top, and we're going to go to the tools, and we want to reconcile. So we're on the cog up top. In the tools section, we're going to reconcile. So we'll select that item. I'm going to scroll down and I'm going to select the normal reconciliation process. Now note, there are going to be times that we can link our books to our bank books. And that could be great because what it really does is it saves us time from ticking and tying off certain transactions, and it'll be able to kind of tick and tie those off for us. But we really still need to know what is happening. It'll save us time of just ticking and tying, but we still need to go over the whole kind of process just to see how the bank statement works. Otherwise, the automation that could save time may actually just confuse more rather than save time. So it's not going to be something that the automation typically is not going to be something that's just basically going to mean that you can just press a button and the whole thing does it and you don't have to do anything. It could save time by basically taking and tying out certain transactions that can be verified on both sides while we reconcile. And what we're doing now, of course, is we are entering everything in the books ourselves, and then we're having looking at the bank as a separate bank statement and manually going in there and ticking and tying off the items. So that's going to be the difference. We're going to go through that kind of manual type process. When you link the bank account, you can kind of pull over some of those transactions, and then of course the system can automatically tie them off because they were pulled over directly from the bank statement. So we won't get into that now. We want to know the theory though. No matter how you tie this thing out, you're going to have some idea of what a bank reconciliation is, what it does for you, and how one is constructed. And then you can kind of work on making the process faster and more efficient. So this is going to be the items. We're going to say that this is going to be the checking account. Typically, we're going to reconcile any kind of cash account. So checking account typically will definitely have to be reconciled. Now, the first thing that we're going to do is the beginning balance here is $25,000. This was the beginning balance that we first started when we entered the first check, the first opening balance into the checking account. Now, if we had not done that, meaning if we didn't put in this $25,000, we didn't know what it was, but we knew we had a checking account balance before we started, then that account will be zero. It'll be zero right there. And what we'll have to do in that session, if that's something that you're dealing with in a different problem, then one way to deal with that is to just keep that 0 and then check it off as one of the activity items. So when we go through, you'll check off the 25,000 as the beginning balance, and that's one way you can kind of work around that first month of reconciliations to be able to reconcile that first month of operations. So for us, we've got that 25 in there, and that's one of the things that's kind of a problem sometimes for that first bank reconciliation. Okay, so then we're going to have the ending balance. So the ending balance we're going to say is this 109,415. So that's got the 109,415, and then the date is going to be 01/31/21 is going to be the date. Now those are going to be the required fields that we're going to have in order to complete the reconciliation process. These numbers, of course, need to just match what's on the bank statement. So we got the beginning balance and the ending balance, which matches the beginning balance and the ending balance. So that's the requirement before we can move forward. If we don't have that the case, then it's not the thing won't work. So those are the requirements. Then we have it as of the date of the financial statement, of the bank statement. And then this information down here is not required. And I actually think it's better not to use these fields, at least when you're learning, because they can kind of check things off and it's just like a ghost check. You didn't actually physically check it off, so it can confuse you when you're not in balance. Meaning, if there are service charges, for example here, we have bank service charges, we could put that into that section. We could put that right here, and it'll charge it to bank charges automatically and kind of check it off. But it's something that I would rather go in there and physically check off in the bank reconciliation process, just to know if I'm not in balance, that's one item that's been reconciled. The same can be true if we had interest income in the bank statement. We could check that off right here. So I'm not going to do that right now. I'm gonna reconcile, go forward without that, and then we'll go through and just tick and tie everything off. So we're going to start reconciling. And here's what our reconciliation kind of worksheet looks like. What we have down here, we have all selected. So we have everything selected at this point. If we scroll down, we see the activity, and this is really just going to be the register, the general ledger, or the transaction detail within the checking account. So here's everything that we have in our checking account, and we're comparing that to the bank balances. So up here we have the statement ending balance. This is what is on the bank statement that we just saw in the ending balance as of the end of January. This shows the cleared balance, which is equivalent to the beginning balance, because the beginning balance is what we already know that cleared the bank. That was on the beginning balance of the bank. And now we need to check off everything off. And as we check things off here, it will reduce the difference. So we need to get basically this 25,000 up to the 109,415. We've already checked off, in essence, if we look at our bank statement, the 25, we've already checked that off. So that's done because it's our beginning balance. Now we're going to check these two off, but we're going to do it line by line, item by item. We're going to check every item off. Once we find all of these, then our cleared balance will be the 109,415. That's all we're doing. Here is our the balance that we've checked off. We're going to go through and check off every other item that's on the bank statement. And by us selecting every item that makes up the beginning balance and the additions and subtractions, we will then have a cleared balance, the amounts that we have told the system that has been on the bank statement, that will be equivalent in our books to the bank statement of that. What's the point of this then? We will have some things that are not checked off, some things that are still unchecked off. This is the check, so we check it like that. Some things will still be not checked, even within this date range, and those will be the items that will be uncleared, and therefore the items that we're going to be part of our bank reconciliation. We will then create the bank reconciliation, which will show the difference between our balance, what we saw on our balance sheet, and the bank statement, which is this balance here. So here's our difference. At the end of the day, this should go down to 0. Okay, so now we're going to go through this. We're going to do this step by step. This shows all the transactions here that we could go through and check off. Oftentimes it's easier to adjust this to have either payments or deposits and do this one by one, because that's how the bank statement often is. So here's the deposits over here. We could find those first and then find the withdrawals. Otherwise, your eye just kind of goes back and forth between the two columns, and that can be a little bit more difficult. So no matter, even if your bank statement isn't formatted in this format and your debits and credits or your deposits and checks are both on the same line, you may want to do all the deposits first and then do all of the checks first so that you know which way you're going and keep everything as straight as possible as you're doing this. So I'm going to close this back up and I'm going to change this just to payments. Now you also have some other kind of filtering options which could be useful, meaning you could filter by date. You may not want to have anything that's going to be past the date of our reconciliation, meaning I don't really need stuff in there that's going to be past January 31st because this is a bank reconciliation as of January 31st, and if I wrote a check after January 31st, it should not have cleared the bank. So I should be safe to pull out anything that's in February because it shouldn't be part of the report. So you have those filtering options and some more filtering options, but the main ones are going to be these items. If you filter through those, that's usually a good way to go through this. Now, when we look at the payments, we have a little bit more option than we do with the deposits, meaning we have the check, we have the reference number, which is the check number, we have the account, which it's not going to be on the bank statement, that's not going to help us much, and then we have the payee, and then the memo, and then the amount. So the amount and the check number will tie out, and those are two great indicators here. The date you would think would be a great indicator, but note that the date will never tie out because the date is always going to have to be sometime later than what we put it in our system for on the bank statement. So if we wrote this check on 1/4, it would have had to go on to somebody else. They would have to receive it. Then they'd have to go to their bank and deposit it. And then their bank would have to talk to our bank before it's on the bank statement. And so it's always going to be a bit later. So the date could help, but it's not going to be as useful as you would think. The check number is really helpful, and the payment amount, of course, is what the main thing we can tie out to. What we'll do now is a lot of jumping back and forth between this screen, our QuickBooks screen, and this screen, which is our bank reconciliation. What we're focusing here on the bank statement, is this items, and we're going to look at these and just tick and tie them off. And as we find these items on the bank statement, we will highlight these. What we're doing is we're really trying to tie this to the bank reconciliation. And that's a subtle but important distinction. We're really going from here, the bank statement, to the QuickBooks file. So you're going from here to the QuickBooks file, not necessarily going from the QuickBooks file back to here. So you could kind of go back and forth, but we're really trying to find these items on the bank statement. And if these items, remember, are not on the books, on our books, then we're going to have to add them. So here's this amount. We've got the date of 1/14, not going to help us too much, but the check number and the amount, 12,000 and 1001. So here's the amount, here's the check number, and the date's going to be different. Notice it's always going to be further up on the bank statement. It's going to be later all the time, I should say, on the bank statement. So we found that. So I'm going to highlight this item. I'm just going to make it green and say check that off. If it was a paper pencil, we just check it off or highlight it and then check it off here that it has been found. And again, I'm going back to the bank statement, and we're going to say here's this item, 1002, 16,000. We're going to go back here, 1002, 16,000. Again, the date's going to be different. That's okay. We're going to check that off. And then I'm going to go over here and highlight this, say we found that. Here's the 1003, 7,000 on the bank statement. Going back to the bank to our books, we see the 7,000, 1003. Also note that I might have messed up the terminology a few times here. If we go back here, I would consider this to be our books. This is our register, this is our books. I might call it the bank reconciliation sometimes, but this isn't actually the bank reconciliation. This is what we're going to use in order to generate the bank reconciliation. So if I mess up that terminology, this is the reconciliating process, the reconciliation tool that we're going to use to create the bank reconciliation. That'll be an actual report that we'll see at the end of this process. So we're going to go back over here and we're going to say that we found that 7,000, and this is a tedious process. I know if you have a long bank statement with a lot of transactions, this takes some time, but it's not too bad. Even with a lot of transactions, it doesn't take too much time. And it's really a huge internal control, so it's worth doing most of the time. So we got 1004 and 400. So if we go back over here, 1004, $400. Again, date different, that's okay. We're going to check this off. Then we're going to go back over here and highlight that and say we found that one. That's good. And then we've got the 1005, 598. So we're going to go back over here. 1005, 598. Check that off. Again, these are written on the 25th and they cleared on the 31st. And note there's no rhyme or reason as to how long it takes. If you're wondering, well, what's going to be the difference between the date on our books here and the bank statement? You can't just say it's going to be a week or so because it depends who's you're giving the check to. They might hold on to it for like a month. They could hold on to it 4 months and then cash it sometime down the line. So you really just don't know. Or you could give it to someone, they're going to go right to the bank, cash it out right away. So it'll always be later, but we never know what it's going to be. It's always going to be later on the bank statement than the books, but we never know exactly when or what. So we found that 598. Now we're looking for 1008 at 260 at 620. So notice we're skipping some. We didn't see that. That's okay because I'm going from the bank statement to the books, not the other way right now. So we're going to skip these. We found this one, the 620. Checking that one off. And these are not going to be in our calculation here because what we're really trying to do is figure the difference here between these two items. And we're going to tie those out, and the ones that we don't check won't be in that process. So we started off with 25,000. We're going to get to this 109,415 by checking off everything that is in this calculation of 25, and then these items that are making up these differences to get to that. Okay, so here's this one. We're highlighting that, making it green. Next one is on 1010, 15,000. So it's not on 1010, and the check number is 1010. So going back here, we see the check number 1010. Again, we're skipping a few. We're down here. This is the one. We're going to check. It should be this one. Let's check that one more time. It should be 1010, 15,000. Note that something went wrong with the check number here because this one had a pay bill and the check number wasn't assigned, which is what went wrong. But then we kind of have to go by the amount here, and we might want to check that out and say, something funny happened. Let's check that out. And once we verify it, well, the check number, it must have been the check number. This bill check didn't print because we are recording this and we're writing the checks outside and then entering the check numbers here. So it's possible for our check number to get out of whack, as opposed to if we were actually printing the checks from the system, that wouldn't happen. So then we're going to say, oh man, it's off, but that's the right one right there. And then I'm going to go back and say we found that one. And then we've got these two items which we're not going to find, because if we go back over here, I'm going to say, I don't see the 80 or that other two. And that means that these I'm going to highlight as yellow. I'm going to say that's not there. And we know that's going to happen because, we know this one's going to happen because I don't know how much the bank's going to charge me until they took my money already and told me that they took it by giving me the bank statement, which shows them taking the money, right? So and I don't know that happened. I know that I'm going to have to reduce my books for that. So we're actually going to have to make a journal entry reducing our books by that 15. And then this is a withdrawal. So I'm kind of imagining that we took money out of the bank and we didn't tell the bank, or we didn't record it in our books, and we don't know exactly possibly what it's for. And therefore, that's the other 80 that we're dealing with there. So those two we're going to have to deal with. We're going to have to fix our books. So we're not going to be able to check that off. We're not going to be able to reconcile until we make a journal entry, until we record, until we recognize the fact that we do owe this money and we took that out and we're not going to get it back. So we've got to reduce our checking account by that. That's the benefit. One of the benefits of reconciling is that we reconcile and understand that we have those transactions we have to record, which we would otherwise have missed. Now we're going to do the deposit side. We're going to check these off. So if we go back over here, I'm going to go from payments to deposits now. And here is our list of deposits here. Here are our list of deposits here. Once again, we're going to go from the bank statement to the books. Now note that we have a little less to go on here because we don't have a check number, and we know the date doesn't help us too much, but the date should be a lot closer for the deposits, because if I went to the bank and made a deposit, it should only take a day to like 3 days for the bank to clear that, because it's my bank, it's our deposit. we deposited it at that bank, as opposed to a check that went to somebody else who went to some other bank and then had to cash the check. So the deposit, the date is actually a lot more helpful than the checks. It should be pretty close. If it doesn't clear within 3 days, we could probably go to the bank and ask about it. Whereas the check could take like a month, and we might not know. So we're just going to go by date and amount. Also note that we're hoping that this grouping matches the grouping with which we entered the deposits into the bank account in our books. And the undeposited funds, remember, is what helps us to do that. We put in the undeposited funds, then we went to the bank and grouped them all together in the proper grouping. And that's going to hopefully help us to tie out to what the bank statement says. So here's the 50,000, and we're going to go back over here. And here's the 50,000 there. And so we're going to check that off and then go back here and say we found that one. So I'm going to make that green. Here's 65. I'm going to go to here, look for the deposit. Here's the 65. Looks good. Check that one off. Going to go back to our statement. We're going to highlight that. Here's 628. We're going to see if we could find a 628. There's the 628. We're skipping this item. That's okay. And we check that off, and going back, we found the 628, highlighting. And then we've got the 20,500. Going back here, we're looking for the 20,005. There it is. Okay, there are our items. Now we've got this one item, so we've checked all those items off. And we don't see this item here, and that's okay. So now we can check from, well, note on this side, we found this item. The only items we found we have not yet found on the bank statement on our books are these two. So that's 80 and 15. 80 and 15 is 95. That's our difference. That's what we're going to have to fix in order to reconcile properly. Now, we then can think about, well, what's on the books that's not on our bank statement? What's on our books and not on our bank statements in terms of deposits is this item that happened in January, and it was $955. There's a deposit on the books, not on our bank statement. Those we're not going to have to do anything about because we're assuming that that is because of a timing difference. That's going to be our reconciling item. That's going to be what the difference is between the bank balance and what's on our books, what we saw on the balance sheet. So that's one of the differences that are there. Now, if we're worried about that, we're trying to say, why didn't this clear? It's been 3 days. It should have been, we had deposit on the 28th, 29, 30, 31. Then we can go to the bank and say, hey, is this going to show up on the February bank statement? Did this clear in February? And if it does, if they say, yeah, if we see it in our transactions in February, then it's okay. It's just a timing difference. It'll be on the bank reconciliation. We'll see that once we reconcile. On the payments side, if we scroll down, we've got a lot more of these. We got this one was on 128, didn't clear, didn't clear, didn't clear. 3 checks, 1006, 1007, and 1009. But again, they were all kind of towards the end of the month, and a check could take a lot longer not to clear. It could be like a month, depending on who we give it to. If we give a check to someone who doesn't typically deposit very regularly, then, if they hold on to the check a long time, then it could very well be that these haven't cleared. We're not too worried. We may not be too worried, depending on who the recipient is of these checks, that they haven't cleared yet. If we want to know if they've been cleared or not, or if they're still outstanding, again, we can call the bank and say, hey, in February, did they clear? Because remember, it's sometime past January 31st at this point that we're doing this. And so we can call the bank and check it out, see if those have cleared yet, and then take a look at that. So those we're not worried about. We need to reconcile this difference, that difference being made by what's on the bank statement, the 80 and the 15, that's not on our books. So we got to enter that. So we've got a withdrawal and we've got a bank service charge. So what we're going to do is we're going to go back to our accounting over here. We're going to go to the chart of accounts. And then we're going to go into our checking account, and we're just going to enter this information into the register. So we've got our checking account. We're going to select the register, and we're going to add some new information to the register. If we select this drop down, we got a few different options on what exactly we want to put in place. We could make a check, but it's not exactly, we're not going to have a check number. So we could try this expense item down here because it's not going to have a check number. So we're going to have an expense item. I typically make these as of the end of the month that they're in. So I'm going to put the date of 01/01, the end of the month, 31/21, January 31st, 2021. No reference number. Sometimes you can put like other or online or something like that if you want to reference the fact that it's on the bank statement. The payee, I'm not going to put a payee. It's going to be the bank. You could put your bank like Wells Fargo or Bank of America or something like that. Memo, again, yeah, I mean, you could put the memo. I'm going to put this $80, but we don't know exactly where it's going to. I'm assuming we took out the 80. We spent the cash somewhere, hopefully business related. We're going to assume it was business related, but we don't know exactly what it was. So I'm going to put that there. I'm going to say the payment was for $80. Okay, and then the account we're going to have. Now, then again, if this $80 that we spent here, if it was pulled out for personal use, if we think we took it out of the business account for personal use, we shouldn't put it on an expense. We should put it in something like draws, and that will not affect the income statement. If, however, we believe that we took it out for business purposes, then we should put it to some type of expense. If we don't know what that expense is, we might put it into something like miscellaneous expense, which is what I'm going to do here. We're going to put that into miscellaneous expense. So I selected the drop down and typed in miscellaneous and got miscellaneous expense. It's in the other expense category down here. If you don't have that, then of course type it in there and you can add that expense as we go. So we're going to save that. That's the one transaction. Now the other thing that happened is we had bank service charges. So bank charges. So I'm going to say the same date. Again, I'm not going to put any of the memo here. The payment was 15, and we're going to put the 15 here, and it's going to be something like bank service. So I'm going to select the drop down, and then I'm going to type in bank, and then we got bank charges. That looks good. So I'm going to say bank charges, and that's going to be the one. And make sure to save it before you go anywhere else. We're going to save that information, and there are those two items. So now when we go back to the bank reconciliation, we should have those reconciling items there. So I would typically then go back to our accounting and the reconcile here. So I went to accounting on the left, and then we went to the reconcile item, and we see the checking account, and we're going to resume the reconciling. So I'm going to resume reconciling. And then we want to take a look at mainly just the payments. So I'm going to go to the payments, and we should have two new payments that are now appeared here. So if we scroll down, we've got this 15 and the 80. That should make up our difference of the 95. So we're going to select the 15 and the 80, bringing the difference down. Now you might be thinking, well, 15 isn't that much compared to this thing. Why couldn't we could have forced it to kind of reconcile without that. Note that you'd really want to get it down to like the dollar if you can, because if you don't, then you're kind of defeating the purpose of the bank reconciliation. Because if this number is off from our bank statement to the books by anything, even if it's just $1, it may not just be that there was one deposit or one check for $1. That's probably not the case. We probably didn't have a check or a deposit for $1. It's probably the case that there was a check and a deposit, or multiple checks and multiple deposits that didn't get checked off. So if if it's exactly on key, then that means that everything that's on the bank statement is checked off, and that gives us a really good verification that everything else is in there properly. If we're off even by just $1 or so, it could very well be the case that that dollar represents multiple things that are throwing us off, meaning multiple transactions that we may not be recording correctly. So if you're forcing it to work, then you're kind of defeating the point, the purpose of it. If you get it exact, then it's really a good indication, and it has to work. So because the beginning balance tied out, and we're just checking everything off from here to our books, and if it's not on our books, then we're adding it. So it has to work because it's the same numbers. The same numbers are here as are the ones that we're checking off, and if they're all the same numbers, they have to add up to the same amount. So that's going to be that, and we can go ahead and reconcile now. So we're going to finish this item. So we're done. We're going to finish this. This isn't the bank reconciliation, by the way. This is just a worksheet to create the bank reconciliation. So it says success, you're reconciled successfully. We're going to view the report now. And here's the report that we have. So we've got the statement beginning balances and the checks and the deposits, and then here's the cleared balance. That's going to be, in essence, the bank balance. That's our bank balance as of the end of the month. So that's going to be that. And then this portion right here is really kind of the essence of the bank reconciliation, meaning this is on the bank, this is our books, this is the register balance. This is what we saw on the balance sheet when we first started. That's what we recorded. This is what the bank recorded. The difference then is this 15,073. Those are the checks that we didn't check off. Those are the checks that were written in January that we didn't check off. And we know exactly what those are because those are the things that we didn't check off. Those are the things that we didn't say, hey, these are specifically items on both our books that tie exactly to the bank statement that were still done in the month of January. That's exactly what the difference is. So we know exactly what that difference is now. And then they like to give us the current data as well. So these are going to be transactions that are after the date, which isn't the main thing on the bank rec. This is really kind of the main part of the bank reconciliation. And then we're going to have the details down here. So if we look at this number here, the uncleared balance, 15,073, then of course the question is, what does that consist of? And if we keep scrolling down a bit, it's going to be the uncleared checks and payments as of 1/31/21. Here's the 16/29/33, and then the uncleared deposit. So the real difference that we're looking at is going to be these two items. Here's the checks, 1629.33 minus the deposit of 955.50. That's the 1573.83 that we see up here, 1573.83. So that's the main thing we have. All the rest of this, these three numbers and that detail is really the essence of the bank reconciliation. This stuff is just added information that could be useful, but this is on the bank statement. We don't really need it here. This is on the bank statement. We see that here. And then this is the bank statement number. And then this is on our books. We see that on our books. What we're really after is this number here. And that's going to be the reconciling items, the items that have not cleared. Now this gives us the more detail up top. This gives us the checks and payments cleared. This is what has cleared during the time period. Again, these amounts are going to be on the bank statement. So that's not the main piece. These are the deposits that have cleared. Those are on the bank statements. These are the uncleared items. These are the items that if we want to check and see if they should have cleared, they should have cleared in February, the second month, the next month. And we can go and check that out. And then these are the uncleared deposits that we can go and check out. So those are going to be the major items we're looking at. And then we've got the uncleared checks. Again, these are going to be after 1/31. So now we're going to go ahead and print this out and finish this up. So we'll go ahead and print this item. And we could print it in a couple different formats. It might not give us the nice Excel format to export. So I'm going to go ahead and print it as a PDF file to the PDF writer. So this is one type of file they have. They have this with QuickBooks. If QuickBooks doesn't give it to you, you could download something called the QuicKBooks printer, which is a free download if you were to Google it. Really useful to have a PDF printer so that you can use the printing option to actually print a PDF file, a kind of digital printed file, even if they don't give you that option to get a PDF file. If they let you print it, then you can print it to the PDF file if you have a PDF printer. And so one of those that's free is called the QuicKBooks printer. I don't promote them or anything or get any money from them, but that's useful to use. So we're going to say print that out. And it might take a little while sometimes for it to generate. Then it should give you your searching items. We're going to see where to search. It's a little bit different of a layout. We've got the drop down up here to find where we want to put it. I'm going to put mine in this docs9 file. So I'll put that there. And it gives me an untitled, so I'm gonna title it bank rec, and then it's gonna be 01/31/21. I'm gonna call it. We'll save that, and that'll be the activity. It's often useful actually really to save this some type of copy of the bank reconciliations, because sometimes the system won't let you go back into those reports and change the dates and find those reports. So this is one form that you may want to have some type of digital or hard copy that you save outside of the QuickBooks system.